Hello, this is Cynthia Fick, and this is the June 20th stock market update. Well, over the last few months, I've been asking you to keep an open mind that things are less bad than we think they are in the stock market and the economy. And so far this year, that's kind of turning out to be the case. I've also told you that we were in a trading range where the market was just trading sideways, very tight range for 5 or 6 weeks, and that I thought we were going to break out of that. One way or another. We're going to break to the upside or the downside. Looks like so far it has been to the upside. I also told you in April that my bull bear indicator, which those of you who've been with me for a long period of time, went bull, and we'll look at that right now. Just want to share with you what is going on in the stock market. So let's look at this. This is the bull bear indicator. The green, or every time that it's gone bull and buy, get in the market, and it just did it again in April of 2023. And you can see down here that since that time, the market has kind of taken off. And so the first thing that got our attention is told us things may be shifting. The next thing, we looked at charts. I went back to 1990 last week, and today I'm going to go back even farther. We're going to go to 1933, and we're going to look at long-term secular bull and bear markets and compare them where I think we are right now. This shows you that way back when in 37, this is 1937 to 1939 time frame, that we were in a kind of a messy, sloppy, trading sideways type of market. These codes down here below, think of it as a stop sign. We have red stop, wait, and go. And the market dropped into the red stop. This is a trend. This is momentum. This is the relative strength indicators that I look at. It dropped into the stop, worst momentum in the market for a very long period of time. That was 1942. If you look forward, sloppy, messy period of time in the stock market again. This was in the late 69 to 80s. And again, in 1974, we dropped into that worst momentum trend, relative strength. And it's only happened 3 times. It did so again in 2009, when we dropped into the stop part of our stop sign. And good things happened out of those situations. And so we'll go another step forward, looking at the same chart. And this incorporates the periods of time where the market, 1942, 1974, and 2009, when the market dropped into those stop signs, where everything was super negative. It shows you what happened when we reached these lows that correspond with these lows right here in the stock market. There are 27-year periods of time from low to the beginning of a new secular bear market. And in 1974, there was a 26-year period of time where after the low until we hit the top here. And right now in 2009, when we did it again, there's only 3 times. We did this again in 2009. And here we are, market has broken out and continues to go up for another, what could be a new bull, secular market that started in 2009 that would go for 26 to 27 years. And I'm going to show you now the results of this. This is, I know everybody's super skeptical right now. It's hard to believe the stock market will ever go up again. It's like in the early 2000s, if I had told you that the real estate market would ever go down, none of you would have believed it at the time. Well, now I'm asking you to at least be open-minded that the stock market could be going up, and it could be going up for a longer period of time. This is not me. This is not my opinion. This is what the stock market has done since 1933. And the stock market does follow trends. It sees into the future. Believe it or not, it's one of the best economic indicators out there. So let's at least keep an open mind. This just shows you these time frames. This is the big sloppy trading sideways time frames. If you remember, the last one we had was 2000 to 2014, where we basically just traded sideways again. And it shows you where we are in this 27, 26 year stock market cycle. See this box right here, the blue box? Well, that is equivalent to where we are in June 2023. You can see that the additional gain when the market, went into this time frame was 142% on the S&P 500. We're talking back into the 50s, 60s, 70s, hard to believe. When we were in the same box in, the early 90s, the S&P 500 went up 444%. The NASDAQ went up 1,190%. So here we are again today, just getting back into a long-term secular bull market that we were close to breaking through. This is a 50-day moving average. We didn't. And so if history repeats itself, this long-term secular bull market that started in 2009, we hit our low right then, could continue as it has historically in the past for 26, 27 years. It was a little touch and go. And we don't know what we know until we see the chart in front of us. And that's what it's saying right now. Again, this isn't my opinion. This isn't my hopes, my dreams. This is facts of what the stock market has done in the past and could continue to do today. So even if we get a portion of that upside, we could still be in a secular bull market based on how the market has acted, even with one of the worst years for the stock and bond market since 1871. So Cynthia Fick, I will talk to you next week. Have a good one until then. Bye.